Are making any sense. So welcome to today's webinar on how we go from idea to investment. Very much to see how we can jointly finance sustainable business growth for Curaçao and beyond. So my name is 𝗙𝗶𝗃𝗀 Enriquez. I work as an independent sustainable investing and innovation consultant, both with investors and entrepreneurs. And most recently, I started collaborating with the Ministry of Economic Development and 𝗙𝗿𝗄𝘁 program, which some of you may have heard of. I saw there's even some of my colleague coaches on the line. And so through them, I've had the pleasure to get introduced to the 𝗙𝗶𝗃𝗀𝗲 and be invited today with you all. So thank you very much for taking the time out of your afternoons to join us. So before we dive in, what is a sustainable business? There are many, many definitions, but for the purpose of today, I'm going to define it as a business that creates economic value alongside intentional environmental stewardship and/or social well-being. This is a definition that's been adapted from the OECD. In practice, it means really going beyond financial profit to create long-term, measurable, and additional environmental and social value. That point on additionality is very key. It really means going beyond the way things are. So for example, by reducing waste and energy compared to the average, or by creating better labor conditions, or by innovating towards circular economy practices. And of course, there are many, many more examples, some of which you might already be able to share in today's webinar at the end. So I also look forward to learning from you. We really have two types. There's generally businesses with sustainable products or services. So the core of what they focus on is a sustainable product or service. A solar panel company would be an example here. Then secondly, there's businesses with sustainable operations. So here an example would be a restaurant which installs a solar panel on its roof. Its core product is still the restaurant food. However, the way it produces that product, the way it operates is more sustainable through the use of solar in this case. So who is this presentation for? It's really for these two types. However, most of the material will be most relevant to your person with an idea or a project or startup that is sustainable. But also a lot of what I'll cover will be relevant for your existing company who wants to invest in more sustainable operations. Third audience is really those who want to help build an enabling environment for sustainable business innovation on the island, such as policymakers, business accelerators, and really people across sectors, because ultimately every company, every organization will have to participate in this transition, and it can only be done through a society-wide collaboration. So I hope from whatever angle you're here today, you will get something out of it. So who am I? I was born and raised on the island for the first part of my youth, second part of my youth in The Hague in the Netherlands. I returned to Curaçao in 2020. And my mission upon coming back was to really unlock more expertise and funding towards a more resilient and prosperous future for our island and its region. I have an MBA and a background further in public policy, economics, and social sciences. I've previously worked at South Pole Group, which is a sustainability consultancy firm. They're quite global. I worked in the Amsterdam office there. I also worked in EU policy, and then I've worked for various impact funds, through which I worked with actual starting up companies who were trying to scale a service or product with a sustainability benefit. So what are we going to do today? First, we'll go into the Sustainable Business Funding Challenge on our island. Then secondly, I'll take you through the investment journey, really from idea to funding. What are the steps we need to take to go from that first lightning bolt moment to getting actual funding? Third, I've made an overview of funding and support opportunities I see on the island and beyond. This is not an exhaustive list by any means. And again, I look forward to hearing from you all in the Q&A if there's any to be added here. And then fourthly, we will shortly go over how to pitch your project. And there'll be a Q&A at the end as well. So before we dive in, I want to tell you a tale of two companies. Beginning with Solyndra. Solyndra was a California-based solar panel manufacturer with a very new and innovative solar panel design. In 2005, the year they were founded, they got a lot of excitement and immediately raised almost $1.5 billion US. This was mostly in private funds and in government loan guarantees. They built huge factories, they made very large investments, which all took a few years. But then once that product hit the market, it appeared that it couldn't compete with global competitors, mostly from China. So it had to declare bankruptcy fairly fast afterwards. And the result was that investors and US taxpayers lost almost all of their money. Lesson here is too much funding too quickly can accelerate very big spending decisions before the business is actually ready or before it's really figured out its unit economics. Now we're going to move to the other side of the world, an example from Bangladesh, the Grameen Bank. Maybe some of you have heard of this bank. It was founded by Mohammed Yunus, who had an idea for microcredit, lending very small amounts to rural people without collateral, allowing them to build small businesses. So initially, Yunus could barely secure any backing. Traditional banks would dismiss the idea as way too risky and unprofitable. Therefore, he had to start by lending $27 of his own money to 42 women. And because there was so little money, the model had to be very simple, very community-based, and very financially efficient from the start. There was big pressure for repayment discipline, and this led to a sort of innovative group lending structure where basically there was a group which formed an insurance for each other. And this massively lowered the default rates and allowed the bank to slowly scale. Then over time, it attracted donors, and then over time, even more institutional support from the more traditional banks. So as a result, today, Grameen is a bank with millions of borrowers, and it's become a global model for microfinance. The founder has won the Nobel Peace Prize in 2006 for that. And today they have almost $3 billion US in total assets. So if we compare these two stories, the lesson is really, it's not just about funding. And that might not be what you expected in a from idea to investment funding webinar. But a shortage of funding is really not always a shortcoming, as it can force discipline, innovation, community ownership, creativity, resilience, partnership. And it's all these ingredients which one truly needs to ultimately obtain business success. So with that long introduction, we are going to dive in to our challenge here on the island for sustainable business funding. Well, first, we are all familiar with the World and Curaçao Sustainability Challenge. Whatever cause one might believe is driving it, we are seeing the effects every day. It is getting warm. And there's impacts on our oceans, on land, on animals, on our own health. And ultimately, this will impact also our economy through the rise of cost of living already today because of the heat, which is just one example of sustainability impact, of course, but the most tangible, I think, this time of the year. And the heat is causing our electricity bill to go up as we're all using more AC and staying more hydrated. Then also over time, there's a risk of tourist income falling due to degraded resources. So all of this has impact on each other, and it calls for the need of solutions that both benefit us economically while safeguarding our natural resources and human well-being. And that's what sustainable business does. And yet it remains underfunded in our region. Why is that? Well, Curaçao frequently falls out of international funder scope. Generally, it's excluded from Dutch and EU programs due to its independent status as an OCT, an overseas country and territory. For that same reason of being an OCT, it's excluded from a lot of regional and international funding. Because OCTs as Curaçao by the exterior are considered a developed part of a developed country, and thus they're not classified as developing or low income enough to be eligible for these regional or international funds. Particularly the World Bank, Caribbean Development Bank, Green Climate Fund will not consider Curaçao for that reason. Now, secondly, looking more internally, there's limited institutional funding ecosystem. So there's still a very conservative investment and lending culture where many banks and investment funds prefer collateralized funding. They're reluctant towards intangible high-risk ventures, such as tech, circular economy, and green innovation. So this is a problem more widely for innovation, really. Moreover, they're unfamiliar with how to integrate environmental and social impact metrics into their risk tools. This particularly has been a big driver for banks abroad to invest more in sustainable business. Now, second issue we have is there's a lack of financial instruments really tailored towards sustainable business. Abroad, we see models such as credit guarantees, subsidy matched funds, or blended finance. Also, these are not yet established much or at all on our island. Then third, there's complex permitting and little enabling policy frameworks, such as tax incentives for green investments. Now, lastly, and looking still being a bit, well, still looking at our internal dynamics, there's a fragmented donor culture. So while many individuals and businesses contribute generously to green and community causes, these efforts are often fragmented and not much publicized. So as a result, local wealth, diaspora ties, and CSR efforts remain very underutilized. A last point I'll mention, which I hadn't actually written on the slides, is that people are sometimes hesitant also to share their ideas out of a fear that someone else might run off with it, or there's a bit of fear that ideas get stolen, so to say, and that again leads to a missed opportunity to find that local donor potentially. But sustainable business is good business, and I'll give you a few arguments why. So for business owners, it makes one more attractive for sustainably minded funders and customers. It boosts one's business reputation, and it lowers energy and water bills, very likely, creates less waste, and it makes one ready for potential future regulations or regulatory impacts from abroad, especially from Europe and the Netherlands, where most notably the EU CSDR, SFDR, and Omnibus are obliging companies to measure and reduce certain environmental and social impacts. I've worked a lot on these regulations, so if anyone's interested in them, please feel free to reach out. Now, for our community, it boosts local economic activity, it supports our climate and sustainability commitments, It creates future-proof jobs in cleaner industries, and it enhances the reputation of our island as a clean and eco-friendly destination, ensuring not only today's, but also tomorrow's tourism. So now how are we going to get there? Here, I'm going to take you through the investment journey, really from idea to funding. And I really hope there's some people in the audience who are walking around with great ideas and can see this as perhaps a starting point. So this is a very simplified version of reality, as pictures often are. The stages I describe here, which is 6 stages to growth. They don't always follow each other very neatly and in order, but the main idea is that these are boxes you'll want to tick on your way before applying for substantial funding. I often have gotten approached by entrepreneurs with a great idea, and then who right away want to apply for the big growth funds in step 6. So this is your large EU funds or regional grants. Unfortunately, this doesn't work, because even if you get the funding, which is very unlikely because these applications are extremely tedious and rigorous, but even if you get the funding, you might end up like the example of Solyndra we reviewed in the beginning, because there's just so much research to do before one can really scale. So really see this journey as gears in a car. One gear brings momentum for the next gear, and it might be tempting to accelerate from gear 1 to 5, but you risk stalling and breaking your engine. So it's therefore key that these steps are followed as much as possible in order. And typically what happens is people focus so much on that growth funding, on that step 6, that if they don't get that, it feels like there's nothing else. But in fact, there's a lot of hidden or more or less visible opportunities to kind of cover you on all the steps towards that bottom line. So here on the right, I've outlined all the potential support, both in terms of expertise and in funding, that one can obtain sort of on your way to bigger funds. Someone have a question?
The question.
I don't think so, Danielle.
No?
I have muted the mic.
Okay. All right. So yes, typically you'll see in the kind of earlier stages of an idea and all the research that has to follow, you'll see people do that mostly with their own time, and sometimes with some of their own savings, contributions from friends and family, business networks, such as 𝗙𝗍𝗄𝘃, through which I now work as well, crowdfunding, accelerators, 𝗙𝗃, here we have 𝗙𝗃 on Curaçao, and I think also on the line. Then there's angel investors and corporate or foundation donations. All of these can help kind of gear up your idea to get it ready for that funding stage. Let's see. Yeah, right now, through 𝗙𝗍𝗄𝘃, I'm working on a validation and a business case project. So really on that step 2 and 3. And those really can be done fairly low cost and with little time, but they do need to be done. So there is really a lot of support for that first steps, but for those first steps, and I hope to give you a sense of how those can be uncovered over the next few slides. So let's go into each step in a bit more detail. So really starts with the brilliant idea, which is, what problem are we solving? So here you observe unmet needs, trends, and inefficiencies. Typically, it's strongest if these aren't something theoretical you read in the newspaper, but really things you experience in your daily life. Because if you are, others probably are too. Then you really want to understand the problem from all possible angles by speaking to as many relevant stakeholders as possible. So suppliers, customers, competitors, government, etc. And then you want to generate multiple solutions before saying, this is what I'm going to be doing. And this is often where things go differently. So often clients will come up with a solution first and then kind of back engineer the problem. So I had a client, for example, who had found a machine for hotels to create souvenirs out of their plastic waste. The clients had connections with this company, with a company abroad that created these machines. And so they just saw an opportunity because we have hotels here and a big, obviously, tourism sector. However, once they started to better understand the problem, they learned that most hotels here already have a good process to recycle their plastic waste. There are a lot of players on that already in the market. And also many hotels were already selling sustainable souvenirs or locally made. And so there wasn't really a demand for this all that much. However, these hotels were struggling with glass waste. So this kind of brought them back to the drawing board and looked for solutions for a whole other problem, a whole other waste stream. But at least now they knew this problem really existed. Going to the next step, which is validation. So here you really zoom in on the customer. You want to understand who is going to pay, how much are they going to want to pay. You want to test assumptions about your customer by speaking to as many potential customers as you can, holding surveys and researching demand at competitors, just actually looking at what they're buying with who right now. And this will get you an initial evidence of real demand. Now let's see. Yeah, one thing I'll say here is that often customers will say they really like green products and services, but the harsh reality is they will not pay more for it, or they won't accept lesser quality. So if for whatever reason your product is a bit more expensive, you're really gonna have to understand what will convince them to pay that premium and who you need to target to get that premium. Because yes, the reality is sometimes these products and services are a bit pricier and sometimes not. That really depends. But the key here is really be critical and make sure you validate who that customer is in this stage, because ultimately with having the right customer, that makes or breaks everything down the line. Now going to the business case, this is really the meat of your research. So how are you going to make money? How big is that market of customers? And how can you scale to serve that entire market? So here you outline revenue streams, pricing, unit economics, and you define channels and partnerships. Some of you might know the business model Canvas, which is often used for this step. You might also want to do some financial modeling here, particularly on your unit economics. And all of this you ultimately distill into a first business plan. And let's see. Yeah. So with that, we get to the prototyping stage. This is really where you're going to see how the solution works in practice by developing a kind of very cheap, easily accessible prototype of your solution. And that allows you to collect data on usage, engagement, and actual willingness to pay. So here I've added a comic which shows how often customers will explain something they want. Then the project leader understands it in a very different way. Then operations installs it in a yet different way. And marketing advertises it yet again in a different way. And then at the end, we find out what the customer actually needs once it's already in the market. This so often happens. Customers explain one thing, but actually need something else. And the only way you can really learn that is by putting a sort of mock product in the market. So what will happen typically in the case of a web shop, people will make a kind of fake web page with no products yet, but the customers can land on it and indicate their interest. Typically with physical products, before you're going to import an expensive machine for production, you want to import a container of the end product and try to sell that, see if there's demand for it, and see what feedback you can collect. Because usually the first mock-up is going to change and you'll end up with something slightly else. And the result of this is that you'll have evidence of traction, which is hugely convincing to investors down the line. Now, going to your team and operations stage, here you're really going to get into the execution mode and decide who will build and grow this. Create an addition to yourself, maybe find another founder or team of founders who complement your skills. Find first hires and advisors and set up core processes, particularly in sales, admin, financials. And in the case of sustainable business, you will want to start tracking some impact metrics as well. Typical impact metrics that investors care about are CO2 avoided, renewable energy generated, and waste recycled, as well as jobs created and communities served. There are many, many more, of course, and this very much depends on your business, which impact metrics make sense. Though generally we see some sort of consensus on the CO2 emissions avoided. Those are frequently asked by investors nowadays. Another tip here is to connect the impact indicators to each product or service sold. So if you calculate for one product how much CO2 it emits or how much you avoid compared to something else, then all you have to do is look at your sales metrics and do the math. So you don't have to separately track these impact metrics. You can just tie them to your actual sales numbers. Now, with all these steps, we're going to summarize it into a check sheet, a checklist. Am I funding ready? So do I have a sound idea with a validated problem solution fit? So you're confident you know what the problem is and what the customer needs, not what they say they need. Do I have a business case? So clarity on expected revenue streams, a financial model showing solid unit economics, a total addressable market defined, and a vision on how to scale. Can I show first traction? So first users of my prototype. Do I have a team of founders with credibility and extra hires or advisors to fill gaps? It's a bit soon often in this stage to have full-time hires, but at least surround yourself with trusted advisors who can complement your skills and knowledge. Then processes, do I have sales and admin processes in place? And optionally, some impact tracking. And then very importantly, funders want to know what you're going to do with their money. So have a clear 12 to 18 month use of funds. Of course, every funder is different. This list is going to vary depending on where you're going to raise funds. But typically, all these elements will make for a much stronger application and case. Now we're going to the overview of funding and support opportunities. Caveat here is I really tried my best to represent the funding and support sources I see on the island as best as possible. But these findings are all based on public information, and sometimes I've added assumptions based on my own experience and conversations I've had in the past. It's possible that some information is not complete or up to date, so always do check with these funders or support sources directly to understand their latest requirements. Second caveat is it's by no means an exhaustive list. I am confident it's the more common sources we see on the island, but it's definitely not exhaustive. And I also hope that we can unlock more sources, some of these hidden sources I mentioned at the beginning. So this list will keep expanding. So here's an overview with our journey once again. Now I've added in each stage, so really the stages 1 to 5, and then the lower line of the large funding at step 6 and beyond. I've added all the potential funders here. Potential funders and support sources, right? Because some here do not provide money, but expertise, which is as or if not more important. So you'll see, let's see, yeah, if we start all the way the top right, we see some organizations that give mostly that technical support in very early stages, such as 𝗙𝗍𝗄𝘃 and 𝗙𝗊𝗃. And then if we go all the way, we zigzag all the way to the end, we get to the commercial lenders and investors, such as the banks, going from a development bank like 𝗙𝗍𝗄𝘀 all the way to our more commercial banks like MCB. And then we end up at the very largest scale, which is 𝗙𝗍𝗄𝘃. Let's see. Now I'm going into some funds in a bit more detail. First, in the international sphere. I won't go into all of them. If anyone's interested in receiving these tables afterwards, I'm definitely happy to send those around. But in the international funding and support realm, starting with your kind of entry level, you have the crowdfunding option through GoFundMe, for example. Here, most projects will fall in the $1,000 to $15,000 range. It's a grant fund, so no need to repay. And this can really be a powerful tool to mobilize diaspora and international support in the very early stages of developing your business. Downside here from what I do here is that it can take some time to get money into Curaçao. Then moving on to kind of your mid-tier, there's Best Life, which is an EU fund, which grants up to 100,000 euros. And here actually some organizations in Curaçao have been successful, and we see more and more uptake in the last years. So that's a very promising one. They focus really on local conservation and ecosystem restoration initiatives. Now I'm going to highlight a few more here in the next slide. We have Horizon Europe. That's one that gets a lot of attention, but it's actually in practice been a bit complicated because of a need to partner with a minimum of 3 EU or affiliated member states. So this, although it's one of the largest EU grants, it's also fairly complex in that it does require kind of EU-wide collaboration. And I'll also highlight in a line lower or below, I have a sort of separate category of regional funds. The Caribbean Biodiversity Fund, again, focuses on biodiversity protection across the Caribbean. Strictly Curaçao is not in its scope. However, I've worked with a client who was able to unlock this funding in their scale up. So with the ambition that all of the successful businesses that are growing and will continue to grow on our island, and them scaling up regionally, that then really does open the door to some of these regional funds that focus on other islands in our region. And we're seeing some success there. So that's very exciting. Now, again, moving locally, local funding and support. Again, here a table where I'll highlight a couple. We have 𝗙𝗍𝗄𝘃, which I've mentioned a couple of times now, which supports across business areas, really all the way from marketing to operations, to sustainability and fundraising. They offer coaching and technical expertise by partially or fully paying the hours of business experts. Then there's, for the earlier stages as well, there's there's the 𝗙𝗍𝗄𝘃 𝗙𝗶H𝗃𝗃𝗃, which focuses on nature conservation as well as other cultural sector themes. and their grants will range typically from 1,500 to 20,000 euros. And they have different fund pools, but generally they and many other of these donors, they do like to see their contributions unlock a sustainable business. So essentially unlock revenue streams. So to make sure that the projects they sponsor will stay also once they're no longer donating. So they like to see their contributions unlock more and more sustainable business initiatives. Then I'm going to move from the more donor and early stage base to a bit more of your banking option. So we have 𝗙𝗂𝗍𝗀 here below, which has a Go Green incentive program, really focused on the transition from fossil fuels to alternative energy sources. This gets really interesting for SMEs or for existing companies who want to create more sustainable operations. So this is a green loan, which will mean that they reduce the interest rate compared to their regular loans. In the case of 𝗙𝗂𝗍𝗀, the interest rate is really known to be very low for the market, as they are a development bank, so they can take more risk than commercial banks. They also ask for less collateral, and they value the development benefit over anything else. So here, if you can show your impact metrics, you'll really make a convincing case. Now here I've outlined a couple more of your more commercial funders. Credits and MCB also offer energy and green loans. Again, for all sorts of technologies, not only solar panels, but also EVs, isolation systems, and more energy efficient machines and EVs and LED lighting systems. At the very end, we have, and this won't be relevant for most of us, but there's the 𝗙𝗍𝗄, who does very large real estate and infrastructure projects. However, they're relevant, and I did want to mention them here because they do encourage sustainable operations and materials where possible within their investments. So if they invest in real estate, they will encourage that wherever possible, it can be built in a more sustainable fashion. And so, well, if you ever get direct funding from them, it's usually a minimum of tens of millions of dollars or guilders. So yeah, that will be, if you're in idea stage now, it's probably a bit down the line. Occasionally they participate in smaller equity or loan structures, often through co-financing or through funds. Okay, now lastly, I'm going into a set of alternative instruments, carbon and plastic credits. I've worked with these quite a bit at my time in Amsterdam, in the sustainability consultancy I mentioned, 𝗙𝗍𝗀. So carbon and plastic credits essentially are an instrument where verified impact can be certified by a certification body. Two famous ones are Verra and 𝗙𝗍 here on the slide. And then that verified impact becomes a credit, which then gets issued on a global exchange, just like a share on your stock market. It's then traded, and then investors can make money if the price of these verified impacts go up. And so as a project, and every time you generate impact and issue new credits, you get that stock price essentially. So requirements for this sort of instruments, although it sounds amazing in theory, the requirements are very rigorous, and the price really depends. So there's a big risk in that part as well. So it's therefore more of an additional and later stage funding source. It's not really your standalone or first option. Now, going back to the journey, and where I typically help is really across the whole chain. I can help in the idea stage with mapping and investigating the problem and doing stakeholder interviews. As I mentioned, right now I'm working on a validation and business case project for a circular business, a very new and exciting idea. I can also work in the operations stage, helping set up core processes, as well as impact measurement and communication. And then lastly, of course, on the funding stage, I've helped in funding search, outreach, and then proposal writing support. Some funds I'm more familiar with than others, particularly some of the European funds are very technical and long. But I have worked at least on parts of those, and I'm always excited to learn more and make us all get more access to these funds. So how I work, so usually there'll be an intro call where I get to know your business or your idea and assess needs and coaching fit. Then I'll write a proposal depending on your needs, and I mentioned the support areas, which really cover the whole kind of chain. And then typically projects take between 2 and 6 months, depending on scope. So we kick off and we make good things happen. Now, in this last section, I really want to turn to you or give you something to think about as you'll sign off later, which is some tips on how you can pitch your project. Now, why does pitching matter? As mentioned, in those first stages of the idea to investment chain or journey, there is a lot of hidden opportunity, a lot of funders which are not advertised, friends and family, networks. And by pitching your idea, you will increase the likelihood that you'll reach some of that hidden support. Investors also don't just fund ideas, they fund compelling stories and energized founders. So going beyond like, I have an idea for this, but instead embellishing it with your pitch, that is really what will get people to get excited and buy into your idea. A tip is to really to know always who you're talking to. Use their language, lead with their priorities. Funders will typically emphasize the financial, the social, or the environmental, and you'll always find each of those elements in a sustainable business. So lead with their priorities. Usually it's better to avoid a charity pitch and really emphasize on growth and returns and your business fundamentals. But that again depends. So a good pitch is clarity, it's credibility, and it's conviction. Now, a structure of a winning pitch, coincidentally, you'll see these elements all overlap with the different stages of the idea to investment journey. So if you've done that homework, or if at least you've envisioned where you want to be going, you'll have some input on each of these parts. So it starts with the hook or the problem. What's broken? What's a problem in society? And then your solution, what product or service are you going to offer and why does it matter? Then your business case, how are you going to make money? Who will pay for this and how big is the opportunity? Then the impact. What, does anyone have a question? No, or is it accidental unmute? So yes, going back to the impact. So what are the impact benefits, or what's ultimately the amount of money you can make with this idea? Then next there's traction. So what have your pilots shown? How are our customers already engaging with your prototype? What partnerships are you speaking to, or have you already concluded? And what awards have you maybe already won? Then the team, why are you the right person to solve this? And then how much funding or support do you need and what will it unlock? This one is very important. So as an example here, let's imagine a sustainable 𝗙𝗵𝗃, where your pitch would be every week in Curaçao, supermarkets and restaurants throw away tons of perfectly edible food, while many still struggle to afford healthy meals. So that's your problem. Now, here's your solution. Our venture, 𝗙𝗃𝗃, made this up. It's a 𝗙𝗵𝗃 that collects surplus food daily and transforms it into affordable, nutritious meals. Now, next, in just 3 months, we've diverted 2 tons of food from landfill and provided 5,000 low-cost meals, reducing methane emissions and feeding the community. This is your traction and your impact. Then next, the local street food market is worth $10 million or guilders annually. With partnership from major supermarkets, we can expand island-wide and replicate across the Caribbean. Here's your business case. And the next and lastly, we're seeking $100,000 or guilders to scale our operations, invest in cold storage, and expand to 3 trucks by next year. That's your ask. So with these elements in mind, I invite you all after this presentation to sit down and start jotting down your pitch. If you don't have an existing company or idea yet, use this as a way to start imagining what's possible. And in that imagination, you can start defining a first kind of North Star to making your sustainable business a reality. So with that, I want to thank you all for your attention and time. We had a very diverse audience today, so I really hope there was something useful for everyone. And now I look forward to your questions or feedback or comments, anything.